So ABC and Co were appointed as the auditors of NMO and NOM Limited, right? So ABC and Co is the old auditor, right? ABC and Co is the old auditor, and were appointed as auditors of NMOE Limited, which is our company, right? Now please understand NMOE Limited. Now here they have specified it's a listed company, so no problem, right? Now they can also just say NMOE Limited. Now, NMOE Limited, the moment they say, you should understand, you should first check, is it a private company or a public limited company? How do I define it, sir? If it's a private company, there will be a word private limited, right? If it's only limited, that means it's a public company. Here they have said listed company, so no problem. Of course, a listed company has to be if the shares are listed, then it has to be a public company, right? So, NOM Limited, a listed company for the terms of two 5 consecutive years from 2010-11 to 2019-20. So, how many years, sir? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 years already been appointed, okay, as the auditors, 2010 onwards to 2020, right? As per the provisions, of section 139 subsection 2 clause B, no listed company or a company belonging to such class of companies shall appoint or reappoint audit firm as the auditor for more than 2 terms of 5 consecutive years, sir. So it's a listed company. Rotation of auditors provision will be applicable under section 139 subsection 2. Therefore, since the AB and Co have already finished 2 terms, two terms as auditors of 5 years, whether they are eligible, answer is no. So they themselves are saying in the question. Hence, management of NOM Limited reached out to BCD and Co. Now, this is a new audit firm, right? BCD and Co. for their nomination as the appointment of statutory auditor for the financial year 2021. Right now, 1920 is over. Now we are 2021. So this is the financial year that we are talking about, right? However, BCD and Co did not provide any written consent to such appointment. Neither did they provide a certificate that the appointment, if made, shall be in accordance with the conditions laid in the Act and the rules therein. So ideally, once you are appointed, one certificate have been provided. No certification has been provided. Whether this is required by law, we will discuss in the answer. Okay, this is the facts of the case. Now, further going ahead. Still, the management went ahead and proposed an appointment in AGM, and BCD and Co were appointed as an auditor for the financial year 2021. Post appointment, those charged with governance identified that majority of the partners, so again, they're appointed auditors for the financial year 2021. So only 1 year they have been appointed. That's what the question is saying, right? Post appointment, those charged with governance identified that majority of the partners in the BCD and Co are same. Partners are same which were in AB and Co, right? So there are common partners. Now, fearing the contraventions of the provisions of the Companies Act, management on guidance of those charged with governance decided to file a complaint under section 140 subsection 1 of the Companies Act against the statutory auditors. You are required to guide BCD and Co regarding the contravention of the understand the question is more important than the question, right? What are they asking, where are they contravening, right? Here there are a lot of provisions which are there, but what is the question, what am I supposed to answer? The answer is the question is, you are required to guide BCD and Co. BCD and Co is a new firm, not the old firm, right? BCD and Co regarding the contraventions of the provisions of the Companies Act with respect to appointment of the auditor. Now, the moment appointment comes, what is the section that should come into our heads? The section that should come into our head is section 139 of the Companies Act, right? That's the most important section, 139 subsection 1, right? So you're required to guide the BCD and Co regarding contravention. Now, this is the question. Anyone having any doubts in the questions? Any doubts in the questions, please? Have you understood the question? I mean, what are your answers? I mean, before going into the answer, what are your thoughts? Yes. Okay, so there is no problem in the question at all. Okay, great. Now, I mean, if there's any, I mean, if anyone if I understood the question, if there are no doubts in the question, we'll go to the answer. Sir, the answer is regarding the contraventions of the provisions of the Companies Act with respect to appointment of the auditor. So we have to give from the management's perspective, okay, what is the contravention, and from the auditor's perspective, what are the contraventions? Okay, that's what we need to kind of say. The first contravention, okay, the first contravention, if you can all mention, is basically non-providing any written consent. That's the first thing. Okay, management has contravened the provisions of not obtaining any consent, and the auditor has not provided any written consent or any certificate which is required to be appointed for the purpose of section 139. Now, after before passing a resolution at the annual general meeting, the company is required to get a certificate from the auditor saying that I am not disqualified, and I am it's within the ceiling number of limits that have been taken under the under the Companies Act. All one four points have to be kind of discussed. Those 4 points are given in the rules, right? That's the first contravention by the company, right? The second one is the manager still went ahead and appointed. Now the next contravention is they've appointed for the year 2021 under section 139 subsection 1. The act is very clear that you have to appoint for a period of 5 years. You cannot appoint for 1 year, right? Under section 139 subsection 1, in a subsequent auditor scenario, you always have to appoint. The term of the auditor should always be 5 years. It cannot be 1 year. So that's another contravention, right? The third contravention is there is a provision under the Companies Act under section 139 subsection 2 that partners in the BCD and Co are the same which are in AB and Co. AB and Co is the earlier firm, right? And BCD and Co is the new firm. Now AB and BC, okay, both have same partners. If there are common partners in the two firms, the firm having the common partners, all those firms are also disqualified. So in this case, AB and Co is also of course disqualified. BCD and Co is also disqualified because there are common partners in both the firms. So therefore, the appointment itself is null and void. It contravenes the provisions of section 139 subsection 2, right? Because it's a listed company, rotation provisions are applicable. Now, the fourth contravention, right, or kind of the problem is management on guidance of those charged with governance decided to file a complaint with the tribunal under section 140 subsection 5 of the Companies Act. Now 145 is not a normal provision, right, where you cannot go and just like that do a you cannot go and file a complaint for removal of the order. That is not correct, right? You cannot do that. 145 can only be invoked when the subject matter is with respect to some fraud, when the auditor has colluded or abetted to do a fraud in the company, right? Then only 140 subsection 5 can be invoked. Though the answer is silent about it, but I'm just adding my this thing, right? 145 is also not the right step from the management to invoke 140 subsection 5, where they can go and complain, because there are only certain grounds, very limited grounds under which section 140 subsection 5 can be invoked, right? Now let's go to the answer, right? Now first, so how the answer should be presented, that is also very important. First, you have to mention the facts of the case in a very brief 2-3 lines. Though it's not mentioned here properly, but 2-3 lines you have to mention the facts of the case. Next, you have to mention the literature, all the provisions that you want to kind of highlight, because that's where you'll get marks. You have to give the, a lot of people, students ask me, sir, do we have to remember the section number? Do we have to remember the subsection number? Answer is yes. As far as auditing is concerned, it's always important, and it's always better to kind of give the section numbers. Otherwise, it's very futile. Only if you just write the provisions without section numbers, it's going to be very difficult. So you need to mention in the answer also, everywhere they have mentioned the section number wherever possible. So very important to remember the section number. So how to remember? Make a quick summary of all the sections and section numbers and keep it as a ready reference for you to revise one day before the exam. And keep revising it, and then only you'll be able to kind of revise, remember the section numbers, right? So facts of the case first, then you'll have to write what are the literature, and then you give your conclusion as to why what are the contraventions in this case. That's the answer. You have to give a conclusion, right? So these are 3 parts to the question. Now let's start with the first one. As per section 139 subsection 1, the company of the Companies Act, every company shall at the first annual general meeting appoint an individual or a firm as an auditor who shall hold office from conclusion of that meeting till the conclusion of its 6th annual general meeting. So 6th annual general meeting, very important, right? And then after the conclusion of every 6th annual general meeting. This is something which you already know. It may be noted further that before such appointment is made, the written consent of the auditor to such appointment and a certificate from him or it that the appointment, if made, shall be in accordance with the conditions as may prescribed, shall be obtained from the auditor. So it's not recommendatory, it is mandatory to obtain this certificate, right? Now It may also be noted that certification also indicated the auditor satisfy the criteria provided under section 141. What is 141? 141 is the qualification disqualification, right? As per section 139 subsection 2, no listed company or company belonging to such class of companies appoint or reappoint an individual as an auditor for more than one term of 5 consecutive years and an audit firm for more than 2 terms of 5 consecutive years. It it may also be noted further that as on the date of appointment, no audit firm having a common partner or partners to the other audit firm whose tenure is expired in the company immediately preceding the financial year shall be appointed as auditor of the same company for a period of 5 years. See how you understand the scheme of how the answer is written. You have to write your answers also like this. You have to kind of give the provisions first. The provisions will have to be given, and then you have to apply the provisions in the answer and give a final conclusion as to these are the contraventions. First, they're starting in section 139 subsection 1. Then they are going to, a written consent has to be obtained because that is addressed in the question. Then they talk about rotation provisions. In the rotation provision, they talk about common partners, right? There's a provision for common partners that, if there are common partners, all the firms having the common partner also equally disqualified as the original audit firm. So that is what has been mentioned. And we already know that it is a listed company. It's already there in the question. It's already mentioned here in the question. It's a listed company. Therefore, this is applicable, right? Now, next after that only they apply. Now they're applying. So with the next two slides are only on the facts of the case. The facts of the case have been, sorry, the provisions have been mentioned. The relevant provisions have been mentioned. Now we are talking about application of the provision on the answer, on the facts. Now, in the current case, while appointing the auditors of the company, a written consent of the auditor to such appointment was not obtained. Moreover, a certificate from him that the appointment, if made, shall be in accordance with the conditions laid down in the Act and the rules were also not obtained. Further, majority of the partners of AB and Co were also partners in BCD and Co. AB and Co already served two terms of 5 consecutive years, that is from 2010-11 to 2019-20, as a statutory auditor of the company. Therefore, hence, BCD and Co were not eligible to be appointed, as auditor of NOME Limited, as all the partners of BCD and Co or majority of the partners of BCD and Co are also partners of AB and Co who have already served 2 terms. So if AB and Co is disqualified, BCD and Co is also equally disqualified. This is something we already know. Since before the appointment of the statutory auditor, the management should have obtained the required certification and written consent from BCD and Co. Therefore, in this case, both the management and the auditors have contravened the provisions of the Companies Act. As a result, fines as per section 147 will be applicable. Now, here they've also gone ahead and given the provisions of section 147. That is, since you contravene all these provisions, what is going to be the consequence? Here in the question mentions what are the contraventions. You have explained the contravention that is not eligible. In the answer, they additionally said because you have contravened, you have to face penalties under section 147, right? So, that is also given in the answer. If I remember, if I have the time and if I remember the penalties, it is very well, advisable to write these penalties also, right? So the company shall be punishable with a fine which shall not be less than 25,000, but it may extend to 5 lakh rupees, and every officer company who is in default shall be punishable with a fine which shall not be less than 10,000 rupees, but which may extend to 1 lakh rupees, right? So I think there are some amendments which have been made to this particular 147, okay, which is applicable for May 22, also applicable to December 20, which I don't think is incorporated here. But I mean, in the current RTP, you will find that there are some amendments in section 147, right? If an auditor of a company contravenes any of the provisions, the auditor shall be punishable with a fine which shall not be less than 25,000, but it may extend to 5 lakh rupees or 4 times the remuneration of the auditor if whichever is less. Now, it may be noted if he's willfully doing it, then he shall be punishable with a fine with an imprisonment for a term which may extend to 1 year, and with a fine which shall not be less than 50,000, but which may extend to 25 lakh rupees or 8 times the remuneration of the auditor, whichever is less, right? So there is some changes here in section 147. Okay, on the penalty provision, which you can further in your new ISM, it will be new study manual will be there, right? So this is on the um, on the, only one part which they have kind of left is completely on section 140 subsection 5. That is not at all addressed. If I am going to write the answer, definitely I will also talk about section 140 subsection 5. They've mentioned in the end that, now fearing the contravention, they've gone, management has, decided to file a complaint. That decision is also incorrect, because 140 subsection 5 can only be revoked when there is a fraud. Here, if you are able to prove that there is a fraud, then you can invoke this section. Otherwise, you cannot invoke this section. Right? Any doubts in this question? I mean, I very well covered how to present the answer. First, you have to write the facts, you have to write the relevant provisions, and then you have to apply those provisions and give the answer. Right? That's how you need to write your answer. Petrol Limited this is on cost audit, right? Petrol Limited is engaged in generation of electricity for captive consumption through captive generating plants. Sir, simple answer. Okay, this this kind of gives me a hint as to where the question is. If you've studied, if you've gone through the recordings, okay, you will know. If you've gone through the cost audit related this thing, okay, you will know where this question is going towards. Because the moment this comes, electricity for captive consumption through captive generating plant, immediately what should strike you? Section 148. There is something on exemptions relating to cost audit. That's where, there are three certain exemptions. Immediately that should what should strike you, right? The company also maintains cost record in its books of accounts as required in the cost record audit rules. Mr. Xylo, a friend of managing director of the company, suggested name of his brother, who's a cost accountant in practice for the purpose of cost audit. However, the statutory auditor of the company is of the view that the company is not legally required to conduct the cost audit. Okay, now the managing director is in a dilemma about the requirement of cost audit. Being an expert in the cost record audit tools, you are required to guide in this regard. So let's understand the question. Okay, there is a person, Petrol Limited. There is a company. It's a limited. So it's a public company. We don't know whether it's listed or not listed. No question. No assumptions. It's a public limited company because the word limited is used. Now it is engaged in the generation of electricity for captive consumption through captive generating plant. What does this mean? Basically, it is using. There is an electricity. It is generating electricity, and that is being used for captive consumption on its own for its own use. It's not selling that electricity, right? That's what is captive consumption. The company also maintains cost records. Now, again, a lot of students get confused in this, right? Maintenance of cost record is one, right? And cost audit is another aspect. There are two aspects which are given under section 148, read with the cost or records and audit rules. Section 148 talks about maintenance of rule number 3 talks about maintenance of cost record. Rule number 4 and 5 talk about cost audit. Cost record maintenance, where any company whose turnover is more than 35 crores in the immediately preceding financial year, cost records are mandatory. Here the question is not on the cost records, the question is on the cost audit applicability. So let's not get confused. There are two aspects, right? Now here then this is unwanted information. Mr. Xylo, friend of managing, this is just to confuse students. Okay, and just to confuse, they have added this line: Xylo, friend of managing director, also suggested name of cost accountant, so on and so forth. The question, sir, what is the question? In view of the statutory is saying that there's no requirement for conducting a cost audit. What is the question, sir? Let's not divert from the question. The question is, being an expert in the cost audit rules, you are required to guide in this regard. What regard? The managing director is in dilemma about the requirement of cost audit. This is what is the question. But whether I am required to, kind of do a cost audit or not. So let's not get diverted from the question. The question is very simple. This is the question. Are you clear? Requirement of the cost audit is the question. Now, what is the answer? Again, facts of the case: give the literature, section 148, rule number 3, rule number 4, rule number 5, and then apply. That's the modus operandi, or that is the pattern of how you need to write your answer, right? So let's go to the next slide. Applicability of provisions relating to cost record and audit. You may not give the heading in the answer, but okay, they've given here. The provisions relating to cost record and audit are governed by section 148 of the Companies Act, read with the Company Cost Record and Audit Rules 2014. So you will have to give the literature. Always, whenever we talk about this one, we always give the literature of the section. Section literature is very, very important. Otherwise, just writing this thing will not give us any great marks. We need to write the section numbers. The audit conducted section shall be in addition to the audit conducted under section 130, 140. It should be 139, right? Rule 3 of the company's cost record and audit tools provides the classes of companies engaged in the production of goods or providing services required to include cost records in their books of accounts. This is not relevant, but this says, some companies will have to maintain cost records. Okay, that is what I said. More than 35 crores in the immediately preceding financial year, right? However, the requirement for cost audit, actually rule 3 is for cost records, right? Then there is a applicability for cost audit for regulated. I'm sure you studied about this. Regulated sectors, non-regulated sectors. Regulated sectors, 100 crores turnover in the preceding financial year and 35 crores turnover in the for the goods and services are required to maintain cost records in the immediately preceding financial year. For non-regulated, it's 50 and 25. Sorry, 50, 25 for regulated and non-regulated 135, right? So only if these conditions satisfy, cost audit is applicable. Now here, thresholds to be met for conducting cost audit, but there are some exemptions given for 3 classes of companies. Like, what are those 3 classes? The requirement for cost audit under these rules shall not be applicable to a company which is covered under Rule 3. And who are those companies, sir, whose revenue from exports in foreign exchange exceeds 75? So I have an export revenue of 75%. My total revenue is 1 lakh rupees. 76,000 rupees is from exports in foreign exchange. It's I'm selling my goods out of India. So then it is 75%. Therefore, I'm not required to do a cost audit. Operating in a special economic zone, no cost audit. Cost record maintenance may be there, but cost audit is not required. Here the question is on cost audit. Next one, which is engaged in the generation of electricity, which is engaged in the generation of electricity for captive consumption through captive generating plants. So this kind of business is also covered in under the exemption. So what is the question in the first line? So they have said in generation of electricity for captive consumption through captive generating plant. That is already covered. Here also it is already covering this. Therefore, since it is exempted, they are not required to do any cost audit in the given. Now they are applying it. So the rules have been explained. Now we are going to apply it. In the given case, Petrol Limited is engaged in generation of electricity for captive consumption through captive generating plant. Therefore, Petrol Limited is not required to conduct cost audit as it is falling under the exemption criteria. Hence, the opinion of statutory order of the company regarding non-applicability of cost audit is correct. Yes, so this is the second question. Any doubts in this? Now the question number 3. Question number 3, again a very important. Now it is on Schedule 3. That is a one part of the company audit chapter. No, Schedule 3 to the Companies Act. The question is very, very simple. They have given us a balance sheet, of model balance sheet under which is apparently in line with Schedule 3 to the Companies Act. We have to comment as to whether this particular balance sheet is in line. Are there any errors in the presentation, right? So for this, what is the requirement from the candidate? The candidate or the student is required to know Schedule 3, is required to not thoroughly, at least have an overall view as to whether the Schedule 3 representation is apt. Okay, so he needs to have a sound knowledge of how the Schedule 3 looks like. Okay, only then he will be able to answer the question. Right. So equities and liabilities, share capital, reserves and surplus, ESOP, share application money, refundable, deferred tax liability, current liabilities, trade payable, just like that it is given. And then you have the current on the asset side, non-current assets, fixed assets, CWIP, trade receivables, deferred tax, debit balance of statement of profit and loss account. Now first understand balance sheet of G Limited. Okay, balance sheet of G Limited as at 31st March 2019. Okay, now we do, assuming that Ind AS is not applicable. Otherwise, Ind AS assets should come first and the liabilities should come down. It's under Ind AS. Now here we are assuming that this is a normal accounting standard. This thing. Okay, therefore we'll go with that. Now, in such type of questions, you have to write it point wise. You cannot write paragraphs. Okay, you have to, the question is comment on the presentation. See, what is the question? The question is more important than the answer. We have to understand whether the presentation is, we have to say whether the presentation is in line with Schedule 3 to the Companies Act. That is the question. Okay, so now such kind of questions, these are not provisions of the law. right? These are not, as per section, blah blah blah, as per this, no facts of the case, no, provisions and applying. It's not a case study, right? These are questions where you have to point out what the errors in the presentation are. Definitely there are errors, that's why there is a question, right? So we have to quickly in your mind, when you see, you have to jot down what the errors are roughly, and then you have to give the point wise. Point number one, this is the error. Point number two, explain the error. 2, 3, 4, 5, 6, and like that you'll have to kind of give the point wise. That's how you have to present it. Point by point, you have to explain the error, right? So at least now, if it's a 4 to 5 mark question, you have to at least mention 4 to 5 errors. That should be 4 to 5 errors, right? So now let's start. Following errors are noticed in the presentation as per Schedule 3 to the Companies Act of 2013. Share capital and reserves are to classified under the heading shareholders fund. In this current case, they have just explained it under equities and liabilities, which is not correct. It has to be equities and liabilities under that shareholders fund. Under that, this has to be classified, right? Although it is a part of equities and liabilities, it must be shown under the shareholders fund. That's the first one. Reserves and surplus is showing zero balance. Is showing zero balance. If you see, look at here, it is showing zero balance here, right? However, if you look at, there's a debit balance in the P&L which is shown in the asset side. See, if it's a credit balance, it is a profit reserve, right? If it's a debit balance, it's a loss reserve. Now, in this presentation, it's very clear in Schedule 3 that even if it's a loss reserve, it has to be netted off and it has to be shown negatively here under the head reserves and surplus. You cannot show zero here and put a negative figure down. So that is an incorrect presentation. That is what is explained here. Reserve surplus is not correct in the given case. Debit balance should be shown as a negative figure under the head reserves and surplus, right? After adjusting the negative balance has to be shown. That's point number two. Point number three. Schedule 3 requires that ESOP outstanding should be disclosed under the heading reserves and surplus, right? Here they have shown separately. ESOP is also a reserve. Employee stock option outstanding is also part of reserves and surplus. Okay, it cannot be shown only share application money pending allotment has to be shown separately. ESOP cannot be shown separately, right? That is an error. Share application money refundable shall be shown under the heading other current liability. It is not a. So what is the difference between share application money pending allotment? I have received the money, I am yet to give the shares. That is share application pending allotment. I'm yet to allot the shares. The company is yet to allot. That is not a liability. Okay, that is not shown under other current liability. Whereas I have received the money here, I have to refund back the money because already allotted. Okay, I am not going to allot any shares. I have to within 60, as per the provisions of the company, that within 60 days, either I have to allot shares, I have to refund. Right. So here it is refundable. Therefore, it is a liability that the company has to pay back to its investor. It's not even a shareholder. Right. So share application money refundable shall be shown as the other current liability. It should not form part of. Separately, it cannot be disclosed. It has to be shown under current liability. Deferred tax liability. Now here deferred tax is shown here, arising out from Indian income tax, and deferred tax liability is shown separately and asset is also shown separately, and this is wrong presentation. It has to be netted off. If the liability is 100 and asset is 60, then 40 has to be shown as net liability. If it is arising from the same laws, if legally you can enforce them, illegally you can set it off, then you have to kind of show it as a net. Here the question is very clear: arising from Indian income tax. That means, and here also it is arising from Indian income tax. That means this presentation of showing it on a gross basis, okay, that is incorrect. Since it is legally enforceable, arising from same Indian income tax laws, it has to be shown on net basis. So that is what is the next listing. Deferred tax liability has been correctly shown the non-current liabilities, but assets and liabilities both cannot be shown in the balance sheet. Only the net of the deferred tax liability assets should be shown if the enterprise legally enforceable right to set off the assets against the liabilities representing the current tax, and it relates to same governing tax laws. Because here it is relating to the income tax laws during the question, we can assume it can be legally enforceable, the legally enforceable right to set off the assets and the liabilities. Therefore, this presentation of showing it on a gross basis is incorrect. The last point is under the main heading of non-current assets. Okay, property, plant, and equipment are further classified as tangible assets, intangible assets, CWIP, and intangible asset under development. Here, what is the presentation that they have given? They've given fixed asset and they've given tangible CWIP, which is incorrect. You have to show it as tangible, intangible, capital work in progress, and you have to show intangible asset under development. These are the four ways in which you need to show your in which the assets, the fixed assets, the PP has to be shown. Now, the use of the word fixed asset is prohibited. The Ind AS 10 or AS 10 has been completely changed to property, plant, and equipment, and not fixed assets, right? So the usage of the word fixed asset is also intent. That is another point. Other point is in capital advances. Capital advances cannot be clubbed as form of as CWIP. It has to be shown as a long-term loans and advances, right? It cannot be shown as CWIP. CWIP is basically the asset is under construction. Capital advances is where you've given an advance, construction is yet to start. That cannot be added as part of CWIP. So that is the last two provisions, right? Keeping in view above, CWIP shall be shown under property, plant, and equipment. The amount of capital advances included in CWIP shall be disclosed under the subheading long-term loans and advances under non-current assets, right? Then the word fixed asset shall has to be substituted with the word property, plant, and equipment. That is the next one. The last point is on trade payables. Again, deferred tax, whatever we discussed earlier, it has to be set off. Again, they've repeated. Trade payables have to be shown, payable as to MSMEs and payable to non-MSMEs. That has to be disclosed. Subsequent to notification and the so and so, the trade payables shall be disclosed as total outstanding to MSME and total outstanding to non-MSME. Here, no, so not MSME, is only micro and small. There is micro, small, and medium, right? Micro enterprise, small enterprise, and medium enterprise, MSM, right? Only micro and small has to be shown separately. Micro and other than micro and small has to be shown a separate line. Here in this case, they have shown trade payables together. Okay, therefore that is another point. So like that, there are some 7 errors we have found out, right? Only by looking at the balance sheet, the 7 errors which are found out. So at least on 4 to 5 points, if you are able to write on a point by point basis, and if it is correct, definitely you'll get marks. Such questions in the examinations, you should be thankful if such questions are asked in the examination, right? So with this, the session for today is over. Three questions are done.